Happy Friday, everyone. In today's video, I thought we could take a look at the open for the four major index markets. Reason being that 10-minute volatility process that we follow identified that the Nasdaq was the more volatile out of the four markets. The S&P was on its scalper, so was the Dow, so was the Russell, but then you had the Nasdaq, and the Nasdaq had broken well outside of our scalper volatility model, and we'll take a look at what that looked like on the charts. What I'm more curious about is seeing if recognizing the Nasdaq was in this more volatile state helped keep us out of trouble, or did that essentially keep us out of some better trade opportunities, taking advantage of being a bit more aggressive? That's what I'm looking to answer in today's video. Now for that, we'll of course take a look at the open. This is from 6:30 to 7, but also that first 30 minutes of that hour. So really we're looking at the full 6 to 7 a.m. Pacific hour. If you haven't already seen the video in which I walk through that 10-minute morning volatility process, that would be a good precursor to today's video. Now starting off here, I have the S&P 500 and I have our scalper volatility box loaded in. Now if we first start with context, the S&P was already in a trend down starting 4 a.m. Pacific. This could almost be argued as a bear channel here. If we actually draw out a channel line here, we can see that a little bit clearer. So let me redraw this as a channel. And this is what the morning looked like inside of the S&P. So very much a bear channel, so bearish trend. We broke outside of that bearish trend at that 7 o'clock candle, but we still did not breach either side's volatility box sign entry lines. And that's where the scalper was the one that was still being respected out of our 5 volatility box models. Quick recap on that, we have the scalper, we have the aggressive, we have the doomsday aggressive, conservative, and doomsday conservative, and it essentially scales up going from left to right. So the more right you go, the more conservative or the increased volatility that we're seeing, thus you'd like to be a bit more cautious. So the S&P here, very much on the scalper. While we did see this bearish trend, that was very much a systematic move down compared to, if we contrast this with now say the Nasdaq. Let's load in NQ. NQ here, by that same 7 a.m. Pacific hour, should look a little bit different. So with our scalper volatility box model loaded in, the first thing that should stand out is we don't really have that same systematic sort of decline here. In fact, if we try and draw that same bear channel, we'll see that the Nasdaq broke outside of that bear channel quite a bit earlier. Redraw as a channel, we draw the bottom edge of that channel. We broke outside right here along with this candle. We also breached our volatility box sign entry line, suggesting that, hey, there was a good deal of volatility inside of the Nasdaq, especially when you compare it to something like the S&P. And that 7 o'clock candle took us outside of the scalper's clouds from that previous hour. So instead of seeing buyers come in here and bring price action up higher, we instead saw that the sellers had full control inside of the Nasdaq. So here, a very clear dichotomy between the S&P and the Nasdaq. One is a little bit more systematic, still respecting channels, hasn't breached the volatility box, which is the S&P. And in the Nasdaq, we're seeing something much different. The Nasdaq here, very much starting to be in a sell-off mode. That systematic decline has now turned more into a breakout mode sort of decline. We've breached that bottom sign entry line, and we've even gone past it. So no buyers to be found inside of the Nasdaq. Now let's switch this over to the Dow. Now inside of the Dow, in that same hour, we had that bear channel as well. So let me draw that in one more time here. We'll redraw this as a channel. And inside of the Dow, we actually broke above that channel. But still, we did not tag either side sign entry line. So a little bit more systematic volatility, a little different pattern in terms of the S&P and the Nasdaq. We're trending bearishly. The Dow, we were really more so in a chop here by that 7 a.m. candle. And before that 7 a.m. candle, we were really more in an uptrend here, or at least a bullish breakout outside of this bearish channel. So differences there between the S&P, the Dow, and the Nasdaq. But the one factor that stands out the most, again, comes back to the fact that the Nasdaq breached the lower end of our volatility box clouds, continued trending lower. So that was our clue that, hey, the Nasdaq, at least so far, is looking like it's going to be the more volatile market. And that ruled out the scalper for the entire day for the Nasdaq. And if we load in our next conservative model, that's the aggressive, we'll find that the aggressive also breached our sign entry line, and we very much had an active test here, trying to see, do the buyers come in respecting this price level and bringing price action up higher? Even with that 7 a.m. candle, we did not break outside, so the test was very much still active. Now, if I zoom out here, take a look to see what ended up happening inside of the Nasdaq. The Nasdaq broke outside. That took us outside of the aggressive as well, and we were on the doomsday aggressive model. So let me load that in and take a look at the decline that we saw inside of the Nasdaq, down about 2.06% for the day. If we contrast this now with the S&P down 1.21%, so a little bit better, still a decline, a major decline in the index markets, but better in terms of relative strength compared to the Nasdaq. And then finally, we contrast this with the Dow, down only 0.61%, so much different when you compare it to something like the Nasdaq. Now finally, the last market that we did not talk about, which we can, is the Russell. Let me load back in our scalper volatility box inside of the Russell. Come right back to that 7 a.m. candle so we don't see the rest here, and let's draw that same bearish channel, or at least try to, and you'll see that it's a lot harder to do so inside of the Russell. We're almost forcing it here, where you have to try and figure out, hey, was the channel here, was the channel here? So it wasn't as clear of a bearish channel from that perspective compared to the index markets. The other thing that stood out, the Russell very much chopping almost as close to the middle of our volatility box as you could get. If we split the up and down clouds basically in half, you would end up where the Russell was chopping around sideways. And with that 7 a.m. candle, we started to make a move down more towards that bottom half of the volatility box zone, but still nowhere close to breaching either the lower or upper volatility box high and entry lines. And if we zoom out here, repeating that same exercise inside of the Russell, Russell was down negative 1.61% for the day. We had the one bounce here inside of the Russell, along with here from our sign entry lines inside of the Russell. And we also had something similar inside of the S&P, and that was in that 8 to 9 a.m. Pacific hour, where price action breached our sign entry line, bounced up, but that was a very small bounce, nothing of a home run sort of trade, no T2, nothing of that level. In fact, we ended up, once we hit T1, continuing to trend back down lower. So across the board here, relative weakness in the indices, but the Nasdaq very much gave us signs and clues starting early off in the morning, within about the first 30, maybe even 35 minutes if you want to count 7:05, that hey, we were a lot more bearish inside of the Nasdaq. So hopefully today's video helps give you an idea of how using just that first 30 minutes of price activity gave you this sign that the Nasdaq between the four major index markets was the weaker, and how that transpired through the rest of the day. Now, of course, we're looking back with perfect hindsight at the end of the day here, but the overall idea still stands. The Nasdaq objectively was the only market out of our four major indices that breached our scalper volatility box clouds and went well outside of it, taking us outside of the scalper, outside of the aggressive, and finally landing us on the doomsday aggressive, all the while when the S&P, the Dow, and the Russell are still on their scalper. So a very stark contrast there, and I think that contrast was your clue. Again, this is another video in that theme of using morning volatility clues to make smarter trading decisions for the rest of the day and at least know what to generally expect as the day goes on. Hope you found this video useful. Take care everyone and have a great weekend ahead.